Domestic wage cuts have been quietly happening since the beginning of this year. However, in the CCP, such bad news will not appear in the public media. The initial rumors of facts of salary cuts started from economy companies and gradually spread to some service industries or regions that were suddenly affected by the pandemic. In some regions, temporary salary cuts and even unemployment caused by sharp declines in income are not unexpected. However, the recent rumors of a large-scale wage cut in the banking industry caused quite a stir on social media. Employees are more worried about whether salary cuts will become the norm. Will more serious unemployment waves come? Will industry-based bankruptcies appear? At the beginning of the second half of 2018, through China's economic downturn, banking profits have declined year by year. This year is also coupled with the outbreak of the pandemic. According to data from China Banking and Insurance Regulatory Commission, in the first half of the year, the country's commercial banks experienced the largest profit drop in more than a decade, reaching 9.4%. The average of the four major banks represent a decline in net profit of more than 10%. We can still see the continuing deterioration of the Chinese economy from the latest data released by the National Bureau of Statistics of China. In the first half of this year, the gross national product experienced a rare negative growth for the first time, the lowest in nearly 45 years. Under the current macroeconomic downturn, even if the epidemic situation improves slightly, the business environment of companies cannot be fundamentally improved. At the same time, we must also see that the transfer of difficulties in the real economy to the financial sector has a lag effect. Coupled with the government's policy of deferring debt and interest payments, the credit risk of the real economy is far from being reflected in the financial sector.